Imagine it is a quiet Tuesday morning. You wake up, make your coffee, and sit down at your kitchen table. Everything feels normal. Then your phone rings. It is your bank. The voice on the other end is calm but serious. They tell you that your account has been flagged. A few minutes later, a letter arrives in your mailbox. It is from the IRS. Your hands start to shake as you open it. Inside, there are words like suspicious activity, federal reporting, and further review required. Your heart is pounding. You did not steal anything. You did not cheat anyone. All you did was take money out of your own savings account. Money you earned. Money you saved for decades. And now the federal government is looking at you like you did something wrong. This is not a story I made up. This is happening to seniors all across America right now in 2026, and the reason it keeps happening is because most people, especially older immigrants who worked their whole lives to build something in this country, have never been told about one specific rule. A rule that has been sitting inside federal law for years, quietly waiting to catch people off guard. If you are over the age of 60, if you receive Social Security, if you have a savings account, or if you help your family members with money, then what I am about to tell you could protect you from a financial nightmare that is almost impossible to undo once it starts. Here is the truth that most seniors never hear until it is too late. The United States federal government requires banks, credit unions, and financial institutions to report any cash transaction that equals or exceeds $10,000 directly to the IRS and the Financial Crimes Enforcement Network, which is also called FinCEN. This is not a rumor. This is not something that only applies to rich people or business owners. This reporting requirement comes directly from the Bank Secrecy Act, which was passed in 1970 and has been enforced and strengthened many times since then. Under 31 U.S.C. Section 53113 and the associated Treasury regulations, your bank has a legal obligation to file what is called a currency transaction report, or a CTR, every single time a cash deposit, withdrawal, or transfer hits that $10,000 threshold. They do not ask your permission. They do not warn you in advance. They simply file the report and a copy goes to the federal government automatically. Most seniors have no idea this is happening, and that lack of knowledge is exactly where the danger begins. Now, here is the trap, and it is a trap that catches good, honest people every single day. When most seniors hear about the $10,000 rule, their first instinct is to think they can simply avoid the problem by keeping their transactions just under that limit. So instead of withdrawing $10,000, they take out $9,000. Or they split a large deposit into two smaller ones across 2 different days. That sounds smart. That sounds like a reasonable way to stay under the radar. But what most people do not know is that this behavior has its own federal crime attached to it. It is called structuring, and it is illegal under 31 U.S.C. Section 5324. Structuring means deliberately breaking up transactions to avoid triggering the $10,000 reporting requirement. And here is what makes it so dangerous for innocent seniors. You do not have to know that structuring is illegal for the government to charge you with it. Federal courts have repeatedly held that intent to avoid reporting is enough. If a pattern of withdrawals looks like it was designed to stay under $10,000, even if your reason was completely innocent, like paying a contractor in cash or helping a grandchild with expenses, the IRS and the Department of Justice can treat that pattern as evidence of a federal crime. In 2024 and into 2025, the IRS Criminal Investigation Division reported a continued increase in structuring cases involving older Americans who had no criminal intent whatsoever. They simply did not know the rule existed. There is something else the government trap relies on that most people never consider. Banks are also required to file what is called a suspicious activity report, or a SAR, when they notice transaction patterns that seem unusual, even if no single transaction reaches $10,000. Under the Bank Secrecy Act and FinCEN guidance updated in recent years, financial institutions have broad authority to flag accounts where the total activity over a period of time suggests possible structuring or financial crimes. This means a senior who makes 5 withdrawals of $2,000 each over the course of a few weeks could still trigger an internal bank investigation and potentially a federal referral without ever touching the $10,000 limit at once. The system is designed to catch patterns, not just single events. And because most seniors are not aware of this, they have no way to protect themselves simply by keeping individual transactions small. The legal shield that protects you from this situation is not complicated, but you have to know it exists and you have to know how to use it. The most important protection available to you is documentation. Federal law does not prohibit you from making large cash transactions. It does not punish you for withdrawing your own money. What the law requires is reporting, not restriction. That is a critical distinction. If you have a legitimate reason to move large amounts of cash, such as home repairs, medical expenses, purchasing a vehicle, helping a family member, or any other lawful purpose, that reason, when properly documented, is your legal defense. The IRS and FinCEN guidelines both make clear that a currency transaction report alone does not mean you are suspected of a crime. It is simply a data point. What investigators look at next is whether there is a legitimate explanation for the activity. If you have receipts, written agreements, bank statements showing the source of funds, or any other documentation of why the money moved the way it did, you are in a far stronger legal position than someone who has no records at all. The Fourth Amendment also provides important protections here. While the government can receive reports from your bank without your consent, they cannot search your home, seize your property, or freeze your accounts without following legal procedures that require probable cause, and in most cases a warrant or court order. Knowing your rights under the Fourth Amendment means knowing that a CTR filing is not the same as an accusation, and it is not the same as permission for the government to take your money. Now let me address what is spreading on social media right now, because the misinformation on this topic is genuinely dangerous. There are videos on TikTok and Facebook right now, some of them getting millions of views, that are telling seniors the $10,000 rule is a new Biden or Trump policy from 2025 or 2026. That is false. This rule has been in federal law since 1970. Others are claiming that if you keep all your money in cash at home, you can avoid the rule entirely. That is also false and potentially dangerous, because large amounts of unexplained cash in a home can become a problem if you are ever involved in a legal proceeding or if your home is searched for any reason. There are also so-called notarios and self-described financial advisors in immigrant communities telling people that wire transfers and Zelle payments are completely invisible to the government. That is wrong. Under the same Bank Secrecy Act framework, wire transfers above certain thresholds trigger their own reporting requirements, and payment platforms that process high volumes are subject to IRS Form 1099-K reporting rules that were clarified in IRS guidance issued in late 2024. Do not take advice on federal financial law from someone who is not a licensed attorney or a certified public accountant. The stakes are too high, and do not assume that because something did not cause a problem last year, it will not cause a problem this year, because enforcement priorities shift, and in 2026 the IRS Criminal Investigation Division has publicly stated it is focusing resources on financial crimes in older populations. Here is your action plan, and I want you to follow this carefully because these steps could make the difference between a simple transaction and a federal investigation. Tonight, before you do anything else, sit down and look at your bank account history for the last 12 months. Look for any pattern where you made multiple cash withdrawals or deposits that were each under $10,000, but that together added up to a large total over a short period. If you see that kind of pattern, write down your honest reason for those transactions and gather any receipts, invoices, or messages that support that reason. If you cannot find documentation, write a clear personal statement explaining the purpose of the funds while your memory is fresh. Then store that statement somewhere safe with your important documents. That written record is your first layer of protection. The second step is to contact your bank directly before your next large transaction. This is something almost no one does, but it is completely legal and it is highly effective. Call your bank's customer service or visit a branch and tell them you are planning to make a large cash withdrawal or deposit and you want to understand their reporting procedures. You are not doing anything wrong by asking this question. Banks deal with this every day. What this conversation does is create a record that you were acting in good faith and transparently. It removes the element of surprise that federal investigators rely on when building a structuring case. The third step is to understand the difference between a joint account situation and a single account when it comes to gift giving. If you are a senior who gives money to children or grandchildren, large cash gifts can attract IRS scrutiny separately from the bank reporting rules under federal gift tax laws. In 2026, the annual gift tax exclusion allows you to give up to $18,000 per person per year without filing a gift tax return. But cash transfers that are not documented as gifts can look like something else entirely on a bank report. Put your intentions in writing. A simple signed and dated letter that says you are gifting a specific amount to a specific person on a specific date for a specific reason is far better than nothing. The fourth step is to never, under any circumstances, split up a transaction intentionally to avoid the $10,000 threshold. If you need to withdraw $12,000 for a home repair, withdraw it all at once, document the reason, and let the bank file their report. That report by itself will not hurt you. Structuring, on the other hand, is a federal felony that can carry up to 5 years in prison. The cure is far worse than the reporting itself. The fifth step is to pull your IRS tax transcripts from irs.gov using the Get Transcript tool. Look at your last 2 years of filings and make sure your reported income is consistent with the financial activity in your bank accounts. Unexplained gaps between what you earn and what moves through your accounts are one of the early warning signs that can trigger deeper IRS scrutiny. If you find inconsistencies, consult a licensed CPA or tax attorney before the IRS finds them first. The sixth step is to talk to your family. If you have adult children or other family members who help you manage money or who receive money from you regularly, make sure they also understand these rules. A well-meaning family member who does not know about structuring laws can accidentally create a pattern in your accounts that looks suspicious to a federal investigator, even if every dollar was completely legitimate. Protecting yourself means making sure the people around you are also informed. My name is James. I am a senior immigration analyst with 6 years of experience, and on Immigration News Today, I do not give you opinions. I give you the survival strategies that keep families together. What I shared with you today is not designed to scare you away from your own money. It is designed to make sure you understand exactly how the federal reporting system works so that your honest, hard-earned savings never get tangled up in an investigation that could have been avoided with a little knowledge and a little preparation. Seniors in this country have worked too hard and sacrificed too much to lose their financial security because of a rule they were never told about. Immigration rules and federal financial laws change overnight. Join my WhatsApp community for instant alerts before I post them here on YouTube. The link is in the description below and it takes less than 30 seconds to join. Thousands of people just like you are already in that group staying ahead of every change that could affect their lives. If you want accurate, fast, and reliable immigration and federal policy updates, subscribe to Immigration News Today right now and turn on notifications. Staying informed is no longer optional, it is essential. I am James. Protect your status. Protect your family. I will see you in the next update.